Markets have bounced back incredibly quickly. But it also has reminded us how, not all global markets are priced efficiently. As a result of that sell down that we've seen, it's created an opportunity, I think, and certainly Citi Private Bank thinks, for clients to be able to get into sectors and stocks that potentially, were priced out of in the last...
Okay, so you're saying this presents an opportunity, but I mean, this presumes that the sell down is not over. And I guess that's predicated upon how you're thinking about the whole unwind of the yen carry trade, whether that's over now. Do you think it is?
Yeah, look, I mean, I think we certainly think that a lot of that has washed through. I mean, that volatility that you've seen, I think, is also going to stop people going back into that. There are a lot of people who are, I think, suffering a lot of pain on the back of that trade. And from our perspective, that was one of the big overhangs for the Japanese equity market that was a concern for us. We now think with that removed, and valuations, actually below historical long-term averages, we think this is a really attractive time to be looking at that market. And also certain sectors where things like big cap tech, selectively, we were left behind for some investors. They couldn't get the allocations they wanted. The spike in vol has also meant, as a result, people can get exits and entry levels that just weren't there 2-3 weeks ago.
So you would expect investors to be somewhat gun-shy after that drawdown in the global markets and the Japanese markets, but small caps and the M&A prospects within small caps in the Japanese market, how compelling an opportunity is that?
Look, I think if you go back to back to sort of 2007, 2008, you saw a huge rally in the small cap and mid cap sector, and during that period, it allowed a lot of asset allocators to look to find alpha in those sort of unloved, under-researched stocks. That's a very, I think, early cycle trade, as it is with the US. Last month, the Russell 2000 rallied over 10%, and the S&P was up 1.5%. So there is real potential that asset allocators, and as we see consumer demand and consumption come back in, that we start seeing investors looking to pick up some of these opportunities, early cycle. So I think as any sort of, when you look at some of the best performing market managers now in the Japanese market, they are looking to those areas to look to drive alpha. And so from our perspective, I think it's attractive to be adding into the Japanese market in small and mid cap, but not just Japan. I'd look at the US as well here. It's still a standard deviation away from the large cap, and even after this 10% rally, the Russell 2000 still looks cheap on a relative basis.
Even with the cyclical headwinds knocking about still?
Yeah, I don't think that's too much of a concern for us there. I think, we are still seeing a resilient recovery in markets. I would sort of, when we go back and look and try and understand why US equities have outpaced, I think what was anticipated of them and has been so resilient. A lot of that is to do with, I think, balance sheets, both corporate and consumer, were cleaned up significantly because of COVID. And as a result, that's fed through to margins. And as a result, I think that's elongated this rally. We are still, just to be clear, we're not looking for a hard landing in the US. We can see EPS growth for this year in the S&P of 8%, and for next year, 6 to 8%. And banks, a good indicator on what sentiment is like in the market is, are banks willing to lend? We've seen from the major banks and their reporting that they absolutely are open for business and they're willing to lend. So from our perspective, we continue to be positive selectively within the US, but I would say sort of bullish wholesale when we think about Japan.